All right, so today we are going to take a deep dive into the mind of, well, I would say one of the greatest investors of all time,
Definitely.
Warren Buffett.
Yeah.
And we're going to be using the Essays of Warren Buffett,
Yeah.
Lessons for Corporate America. A collection of his shareholder letters
Yeah.
and just offers a ton of wisdom on business and investing and
Right.
kind of even life.
Yeah.
But you're probably hoping to uncover some of the secrets
Mm-hmm.
to Buffett's success
Sure.
and get a glimpse into the principles that helped him build, the behemoth that is Berkshire Hathaway.
Yeah. You're spot on.
So let's start with Berkshire Hathaway.
Okay.
It's massive today. It's this huge conglomerate.
Right.
But I've heard it had some really humble beginnings. Can
Yeah.
you maybe tell us a little bit about that journey?
So picture this. 1964, a struggling textile business called Berkshire Hathaway. Each share was worth a mere $19.46.
Wow.
Now, fast forward to today,
Sure.
and that same share is worth about $100,000.
That's insane.
Yeah, it's not just growth.
It's wild.
It's a financial earthquake.
Yeah, so how did he turn this,
Yeah.
failing textile business
Right.
into this financial,
Powerhouse.
powerhouse?
Yeah.
How is that even possible?
Think 20% annual growth year after year, just like a snowball rolling downhill, gathering more and more snow.
Okay.
That's the power of compounding, and Buffett harnessed it brilliantly.
Wow.
Today, Berkshire Hathaway is a sprawling holding company with over 80 subsidiaries.
Jeez.
You've got your household names like Geico, See's Candies, Dairy Queen, Duracell,
Wow.
BNSF Railway.
Gosh.
And hold on tight, because they also have significant stakes in giants like Coca-Cola, American Express, and Apple.
It's like a who's who of the most successful companies.
Yeah.
But how did he do that?
Yeah.
How did he even make this? Was there a master plan?
He calls it the double-barreled approach.
Okay.
So imagine having the control of owning a business outright, but also having the flexibility of being able to invest in companies in the public market.
Gotcha.
It's like having your cake and eating it too.
Yeah.
So on the one hand, he looks to acquire 100% of companies with strong economic engines and top-notch leadership.
Okay.
But of course, at a fair price, on the
Yeah,
other hand.
yeah.
He strategically buys shares of public companies,
Mhm.
but only when the price is significantly below what he believes to be their intrinsic value.
But he's really carefully aiming for this
That's right.
mix of control and flexibility.
Yeah.
I can see how that would let him
Right.
kind of play in different market conditions.
That's right.
But this intrinsic value thing, can we break that down a little bit?
Sure.
Because that sounds a little like Wall Street jargon.
Well, it's more than just jargon. It's really the cornerstone of Buffett's investment philosophy.
Okay.
Intrinsic value is about looking beyond the hype and seeing the true worth of a business.
Right.
Think of it as the difference between looking at a snapshot and watching a movie. The stock price is just like a frozen moment in time, but intrinsic value is about understanding the whole story.
Gotcha.
So you analyze the company's long-term economic potential, the quality and integrity of its management team,
Right.
future tax implications, and even the impact of inflation.
Wow.
So it's a much deeper dive.
So he's basically saying, don't just pay attention to the day-to-day market noise.
That's right.
Look at the long term.
You got it.
It sounds like he's prioritizing quality and potential over,
Absolutely.
quick profit.
That's right.
Exactly. And speaking of quality,
Yeah.
one of the things that he really emphasizes is the importance of strong management.
Yes.
In fact, I think he once said,
Mhm.
just run your business as if you own 100% of it, it's the only asset you have, and you can't sell it for a century.
Imagine that level of ownership in all of your subsidiaries.
Wow. That's really powerful.
Yeah.
It must foster such a sense of responsibility
Yes.
and long-term thinking
Yeah.
within those companies.
It does. Buffett understands that a company is only as good as the people running it.
Right.
He believes in finding exceptional managers and giving them the autonomy to build and grow their businesses as if they were their own.
Wow.
This not only attracts top talent,
Yeah.
but it also creates a culture of accountability and excellence.
So he's not just buying businesses,
Right.
he's investing in people.
Absolutely.
It makes you wonder, how he spots these exceptional managers.
Yeah.
What's the secret sauce?
That's where his deep understanding of human nature and business acumen truly shine.
Yeah.
It's almost like he has a sixth sense for identifying talent and potential.
Wow.
And once he finds those gems, he trusts them to do what they do best.
Yeah.
Yeah.
Yeah. It's fascinating how he builds these long-lasting partnerships
Mm-hmm.
and really empowers the people that he works with.
Right.
And it really does set the stage for that long-term thinking.
It does.
Which brings us to, like, Buffett's investing principles.
Mhm.
And he has this really interesting way of looking at the stock market.
Yeah.
Like something about a Mr. Market.
Ah, yes. Mr. Market.
What is that all about?
It's a brilliant analogy. It was coined by Benjamin Graham, who was Buffett's mentor.
Right.
So imagine the stock market as this kind of unpredictable character,
Okay.
this Mr. Market, and he shows up at your doorstep every single day.
Okay.
He's always offering to buy or sell you stocks.
Right.
But here's the catch.
Okay.
His prices are driven by emotions.
Oh, so it's not always about the actual...
It's not about the actual worth of the companies.
Gotcha.
Sometimes he's euphoric and he overvalues things,
Right.
and other times he's gripped by fear.
Oh, wow.
And he offers you ridiculously low prices.
So Buffett just uses these mood swings
He does.
to his advantage.
Well, he sees this volatility not as a threat, but as an opportunity.
Okay.
He understands that Mr. Market's irrationality can create these incredible bargains
Right.
for those who can see through the emotional fog. So when Mr. Market is panicking and offering stocks at a steep discount,
Yeah.
Buffett steps in and scoops them up.
He's like, when others are fearful,
That's right.
I get greedy.
Exactly.
And this whole long-term perspective
Yeah,
really ties into another one of his core principles, compounding.
it does.
Right.
Think of it this way. You invest $1
Okay.
and you earn a modest 5% return each year.
All right.
You might think, well, that's not much.
Yeah.
But over 47 years, that single dollar, through the magic of compounding, turns into $7.
That's crazy.
Yeah, it's like a chain reaction.
Wow.
Yeah, your money's not just growing.
It's growing on its growth.
It's growing on top of its own growth.
That's wild.
That's the magic of compounding.
That's a pretty compelling argument for just being patient
It is.
and like letting your investments just work for you over time.
Absolutely.
But I've also heard that Buffett is like super cautious
Yes,
when it comes to using debt.
very much so.
Why is that?
So while he understands the allure of using borrowed money,
Wait, leverage.
yes, to amplify returns,
Yeah.
he also recognizes the inherent danger in it.
Okay.
It's like riding a roller coaster.
Okay.
The highs can be exhilarating, but the lows,
Right, it can make it terrifying.
yeah, they can be terrifying.
Yeah, so leverage magnifies both gains and losses.
That's right.
And if a company can't handle that downside, it can be pretty disastrous.
It can be a disaster.
Especially like what happened in 2008
Exactly.
with the financial crisis.
Right, a lot of businesses.
Took on too much debt.
Yeah, they took on too much debt and they ultimately collapsed.
Yeah, it makes a lot of sense.
The 2008 crisis was a harsh reminder that leverage can be a double-edged sword.
Right,
It highlights the importance of building a strong financial foundation
right. And not getting too greedy.
and not relying too heavily on borrowed money.
Yeah, it's interesting how his early experiences really shaped this perspective.
They did.
You know, I was reading about his cigar butt investments
Yeah,
where he would buy like these really cheap declining businesses
right.
and just like squeeze whatever profit he could out of them.
Yeah,
It's a totally different strategy
He is
than what he does now.
it's a complete 180.
So what happened there?
So early in his career, Buffett dabbled in these cigar butt investments.
Okay.
You can think of them as businesses on their last legs with maybe one last puff of value left in them.
Okay.
He'd buy them cheap,
Right.
squeeze out whatever profit he could, and then move on.
Gotcha.
But he soon realized that even though they were cheap,
Yeah.
the returns were often meager and the risks were high.
So it's like trying to light a soggy cigar.
It is exactly.
You might get a couple puffs.
You might get a few puffs, but it's ultimately a frustrating experience.
Right. So he learned that it's better to invest in like the strong,
Yeah.
healthy company
It's the healthy companies.
with a good future, even if they're a little bit more expensive.
Even if they cost a little bit more up front.
Gotcha.
He shifted his focus to what he calls wonderful businesses. Those with durable competitive advantages, strong management teams, and long-term growth potential.
So he'd rather pay a fair price
He would much rather pay a fair price for a great company.
than a bargain price for a mediocre one.
Exactly.
That's a great analogy.
And he also talks about something called the institutional imperative.
Yes, I was going to ask you about that.
Go ahead.
I found that super intriguing.
It is fascinating.
What does that even mean?
Think of it as this tendency of large institutions, like
Yeah.
corporations or investment funds,
Right?
to follow the herd,
Okay.
even if it means making irrational decisions.
So it's like groupthink, basically.
It's a group thing. Yeah.
The pressure to conform, even if it
even if it makes no sense.
Doesn't make sense.
It's like a flock of birds suddenly changing direction.
Okay.
Nobody wants to be that lone bird flying in a different path.
Right.
So Buffett realized that independent thinking is crucial in the world of investing.
It makes sense.
He often goes against the grain, zigging when others zag. And it's this willingness to stand apart from the crowd that has allowed him to achieve such remarkable success.
So he's like looking at everything through a different lens.
He is.
And just spotting opportunities
He is.
that other people are missing.
Because they're too caught up in the herd mentality.
Wow. Yeah, it's clear that he has this ability to just like think independently and challenge the status quo.
Absolutely.
And it seems like this approach really extends to his views on corporate governance and accounting as well.
It does.
So can you elaborate on that a little bit?
So Buffett is a huge advocate for transparency and clear communication,
Okay.
especially when it comes to interacting with shareholders.
So no like sugarcoating or hiding behind financial jargon.
Yeah, no sugarcoating.
Just being straightforward.
Exactly.
Make sure everybody knows what's going on.
That's right.
Okay.
He wants shareholders to have a clear and accurate picture of the business,
Right.
both its strengths and its weaknesses.
Gotcha.
And he's also famously skeptical of earnings predictions. In fact, he avoids making them himself.
Interesting.
He believes that focusing too much on short-term earnings targets can lead to bad decision-making.
Right.
That ultimately harms the long-term health of a company.
So it's about building a sustainable business,
Yeah.
not just chasing those quarterly profits.
Exactly.
And speaking of corporate practices,
Yeah.
I know Buffett has some pretty strong opinions about executive compensation.
Oh, he does.
What are those?
He believes that executive pay should be directly tied to creating genuine value for shareholders.
Okay.
He's especially critical of these stock options
Right.
that reward managers just for retaining earnings.
Right. Instead of actually doing something.
Instead of finding ways to actually grow the business,
Yeah.
it's like giving someone a bonus for keeping their money in a savings account.
Right.
It doesn't incentivize them to take risks or make bold moves that could actually lead to bigger returns.
So it's about aligning incentives,
Exactly.
making sure that everybody is working together and focused on like that long-term value creation.
It is.
Yeah.
Buffett wants to see executives sharing both the triumphs and the setbacks with the shareholders.
So no free lunches.
No free lunches.
Gotcha.
He believes that true leaders are willing to put their own skin in the game
Right.
to share the risk as well as the rewards.
This alignment of interest just makes a lot of sense.
It does.
You know, you're all on the same team.
Yeah.
Everybody's accountable.
Right.
And what about the role of the board of directors?
Okay.
What does he think about that?
So Buffett believes that directors should be more than just rubber stamps
Okay.
for management's decisions.
Right.
He sees them as guardians of shareholder interests,
Gotcha.
responsible for making sure that the company is being run ethically and effectively.
Okay.
So he looks for directors who are independent, business savvy,
Yeah.
and possess a deep understanding of the company's operations.
They got to know what's going on.
They need to know what's going on.
Yeah.
And they also need to be willing to ask tough questions, challenge assumptions, and hold management accountable.
Wow. So they're active participants
They are.
in shaping the company's strategy
Yes.
and ensuring that long-term success.
It's about providing that critical independent perspective.
And finally, I have to ask about his approach to philanthropy.
Okay.
At Berkshire, shareholders actually get to direct a portion of the company's charitable giving,
That's right.
which is a really unique approach.
It's pretty remarkable.
Why do you think he does that?
Well, it's a testament to Buffett's belief in shareholder empowerment.
Okay.
He recognizes that the owners of the company
Right.
should have a say in how its resources are used, not just for profit making,
Right.
but also for making a positive impact on the world.
Yeah. So it's not just about making money.
It's not just about making money.
It's about using that wealth.
It's about using that wealth to make a difference.
And to make a difference in areas
Yeah.
that the shareholders care about. That's really cool.
It's a very democratic approach to philanthropy.
It is.
Yeah.
Well, this has been an incredible journey
It has.
through the mind of Warren Buffett.
Yeah.
I feel like we uncovered so many great insights
We did.
from these shareholder letters.
A lot of wisdom.
It's amazing how these principles, though they're rooted in business and investing,
Yeah.
can really be applied to
Yeah.
so many other aspects of life.
They really can.
Absolutely.
His wisdom transcends industries
Yeah.
and professions.
It's about clear thinking,
It is.
long-term vision,
Yeah,
building strong relationships.
absolutely.
And that's something that we can all
we can all learn from
learn
it.
from and apply,
Definitely.
in our own lives. Well, thank you so much for joining me
It was my pleasure.
on this deep dive into the world of Warren Buffett.
I enjoyed it.
And to our listeners out there,
Yeah.
thanks for listening.
Thanks for tuning in.
And we hope you found these insights as valuable as we did.
Absolutely.